Good morning, guys. How we all doing? Happy New Year. Hope we all had a wonderful holiday and we're ready to get back to work. I wish us the best of this year and hope we've all had a review of the past year and we have our targets for this year. So talking about the past year was quite good, but we hope to go harder this year. Portfolio was up 5%, but let's try to see how much we can improve this year. It was quite decent, right? All across the board, about 10% up, but all across the board, yeah. So on average per each account. So let's see how we can improve this year and what we can do. First of all, unless you've been living under a rock, you can see Trump has been moving again, and as expected. So he toppled the Venezuelan president. Now he's gonna face some charges in the U.S. So what does that mean for us, and how do we approach this as investors? You can see, like, generally the market didn't react much to that. I guess we're getting desensitized to Trump's geopolitical movement. How would I say that? Like, his geopolitical bohaha and all the crazy things he enjoys doing. But what's the impact? First of all, we have to understand that when it comes to Venezuela, they actually do not produce a lot of, like, oil. They're not a major factor in the global market. Yes, they do have a huge oil reserve, I think the largest in the world, but they don't produce a lot. And I think that is going to change soon because Trump is talking about American investors going into there, so we can expect risk on markets to start to see some upside soon. And if we're talking risk on, we're talking about things like oil, we're talking about the Canadian dollar, we're talking about the Kiwi dollar, we're talking about this kind of pairs, this and Aussie dollar. These currencies, they thrive in this risk on markets where people are willing to take more risk and are looking to investors are looking to take more risk generally. So first of all, if we look at what has been happening throughout the past year, you could see from last year last year we saw a lot of how would I say, bullish momentum come into Euro USD, and the euro was up, and now we pushed into here. And if you can see, since we are in this impulsive phase, all we are looking for is just how to buy this market. Until the trend changes, we still have the same outlook and still looking to do the same things. And if we look at this weekly chart, you can see right here, we started to push up, and then once we came into here, we've been moving sideways. Like, you could just see, like, this, like, not as, like, you could see from the past, right? From, we're talking March, April, May, June, we were just pushing up and pushing up, and then from the summer last year to the end of the year, we've just been moving sideways, and which is quite okay to see. But also remember, we're still in an uptrend, so you really don't want to be looking for anything except for buys, rather, unless you see something different. And if we go to the daily time frame right here, you can see this is our swing low, this is our swing high, and from there we retraced into discount prices, and then we took out liquidity. And once we took out liquidity, we had that change of character, and you can see we took out this liquidity, right? Then we started to push up, and before then we had this internal market structure which was to the downside, and we switched here, broke the highs, started to break the highs, and from there we've been retracing, right? So you can see all we're just looking for is those longs, and we've taken out this liquidity here, and now we're retracing into this area of demand. So if you look at our daily, where's our daily fractal high and our daily fractal low? We had here push up, right? So we have this push up, this is our fractal, this became our fractal low, right? And then we broke it. Now on the daily, we've broken the fractal low. We're fractally bearish. but we're still swing bullish. We're fractally bearish on the daily, and we have our high here and our low here. Okay, and if we move on to the 4-hour, on the 4-hour chart, you could just see we swept this liquidity, took out all of this liquidity that we were targeting. Now we've connected with this area of the with this sell before the buy up, right? We've connected with this sell before the buy up. So on the 4-hour, we have our fractal high here. So for me, I would wait for this to go before looking for positions, right? I would wait for this to go and then retest the monthly, the yearly open, the 3-monthly open, and then from there we could start looking for those scaling longs, right? So let's keep an eye out for that, and let's see what the dollar and euro USD wants to do for this week. Moving on, if we go to the dollar index, right? For the dollar index, throughout last year we saw quite a bit of a dump, a strong dump, right? You can see if you measure this, right, let's measure this, you can see almost about we dropped about 13,000, right? 13,000 pips, right? Or 1,300 pips rather. So you could see how far we dropped, and the dollar was just dumping throughout last year, and from the summer we started to find a little bit of a base here around here, and then we had this 1 2 3 reversal pattern show itself. We swept this liquidity, and then we started to push up from there, and since then we've just been moving sideways. Honestly, we've not seen a clear boost in stepping convincingly, and we're hoping, okay, from here we'll start to see higher prices. But once we swept this liquidity high, you could just see we started to reject from there and started to take out the lows instead. Now we came here, also swept this low, as we have here as our area of demand too, where we have here as our area of demand, which is acting and pushing the market up higher from here. So for me right now, the dollar is a bit unclear, and I just want to wait for some proper confirmation. If I start to see from here, from the supply level, maybe, because here we have liquidity resting, we have here as our supply level, and from here, right? So we have liquidity resting here. We have here, we've grabbed this liquidity, we have here as our supply level. This is our fractal low. So once this low goes, then I can start looking for further short on the dollar, because at the end of the day we're still bearish, as we've been for quite some time now. So that is my plan for the dollar for this week. And moving on to gold. Gold, what can you say, guys? Gold has been pushing up. I mean, based on the news and everything going on around the world, you could just see people would flood to gold, and that only makes sense. So it only makes sense to look for longs on gold, as we've been looking for quite some time now. As you can see, we've swept this low. This became our strong demand area. Why is it a strong demand area? Because it took out liquidity, and now we started to break structure from it. So I would like to maybe mirror this move higher, up to like about 4,500 level, and so I would just be waiting for further entries. And where would I be waiting for further entries? The same thing we do every time, guys. You wait for this liquidity lows to be taken, and once you see that those liquidity lows have been taken, you wait for that change of character, and you can get into those trades. So it's time to just be patient now. We don't want to look for a position here, we want to look for position rather inside here. So we just wait for that pullback, and then you could just look for further entries on this, right? But don't look for sells, just look for buys. Moving on to AU, guys. AU from last year was quite we had a lot of bullish momentum coming to this market, although yes, we're choppy for quite some time, but you could just see, like, swing wise we're still bullish. Like, we never broke our swing lows, and as long as our swing low holds, we don't look for we're not looking for sells. Any sells that we're looking for would just be retracement trades, if it makes sense. And you can see swing low, swing high. Now we've broken this high, although we just swept the high because we didn't have a candle close above it yet. We just swept the high. We didn't have a body close above it. I mean, we swept the high, and now let's see. I would be waiting for a deeper retracement on this and before looking for further longs. But I'm still more interested in longs, as this is now our sell before the buy, and now we're inside this. So all you just want now is, okay, you can see now we're inside that demand level. Right now we're inside that demand level, and we're looking here. We have liquidity resting here. Liquidity resting here. So let's see if we grab this low and then we see that change of character, then we could start to look for those further longs. But be very careful, guys, because what do we have here? You can see we've had this break of structure, and you don't want to be, this is not the ideal place to be taking new positions. You would rather take new positions here than here. You get what I mean? Because here we've had that break of structure, and after a break of structure, what do we expect? We expect a pullback. Now we're pulling back, right? So you wait for that pullback to be over, and what's the confirmation for the pullback being over? You want that change of character. So once you see that change of character, it indicates that, okay, perhaps bulls are ready to step into the market, and you can step in with them. Moving on to GU, one of the craziest pairs of last year. GU, quite beautiful, just moving on its own, like, you know, it's like, you know what, I'm gonna just do my own thing. But it is quite nice to see. And you can see on GU we're still bearish because the pound fundamentally is still a bit weak, although it has been gaining some strength because the inflation numbers has been dropping, so in the UK, so we can expect perhaps maybe some more strength to come in on the pound. But for now, until we take out this, so you can see here we have our swing high, we have here as our swing low, right? And so now you can say, okay, now this is a retracement into premium pricing, and you want to sell from there. Right, you want to be selling from premium pricing, right, especially in a downtrend. So for you can see, okay, now we've come into this high and we've swept this liquidity, and that is causing this retracement that we're seeing here on GU. So give me a second, let me even adjust this box. I don't know why it's drawn this way. Right, so that is what is causing this retracement on GU. But also you can see we've started to take out this high, we took out this liquidity high, and now looking at this high also, this one is still holding, right? I would like to look for short on this, but only if it aligns, right? If the whole thing aligns, because honestly it is moving, it is not the clearest of pair at the moment. If we go to the higher time frame, let's go to the weekly, so we can have now I'm moving crazy. So you can see, right, we've been making higher prices, throughout last year we're making higher highs and higher lows, moving higher, and now we started to break the low, right? On GU we swept this low, had a body close beneath it, so this became our swing high, this became our swing low. So now we've retraced into premium. So you just want that change of character, right? Because what you can have here is, okay, we've had that liquidity sweep, as it's clear to see, you've had that liquidity grab rather, as it's clear to see, and now you've had that change of character on the 4-hour. So where's our new supply level? This is now our supply level, right? This is now our supply. Now looking at this as our supply, we have liquidity here, liquidity here. So once you've identified that area of liquidity, you want to wait for retracement. Perhaps we come back to grab this liquidity, but honestly we don't even need to start moving, to start pushing downward. So if we break this low, right, so you can see if we break this low, then I would be looking for some GU shorts, but I'm more interested in shorting this pair than say NU, because NU is still bullish, right? If you look at the fundamentals of the New Zealand dollar, you could see that they're bullish because they've, as I've been saying, they've eased their rate cut cycle, and now they're looking to hike rates, and that means bullish tendencies for the currency. And if you look at the geopolitical situations going on also, you could expect some bullish some risk on pairs to start seeing some bullish momentum soon. So let's see what happens on with these pairs, and then we would start to analyze them better from next week, because as you can see, liquidity is just returning into the market as the holidays are just finishing, right? And with NU, you can see we're in a downtrend, right? You can see lower low, lower high, lower low, lower high, lower low, lower high, right? Lower low, right? Highs were being respected for quite some time now, and now we've had this body close above the highs, right? We've broken those highs, which can signal a trend change. We have liquidity resting underneath here, right? We have liquidity resting underneath here. So if we come here, grab this, and then above, and we see that change of character right above this high, these are fractal high now, this 57781. So if we break this, let's go to the 4-hour where you would likely be, right? So it makes more sense here, right? So you can see this right from here. You can see, right, we had this liquidity, we grabbed this, caused this little pullback. Now we've come into here. I would like to see this low taken out, and then a break above this, that 5778 as I mentioned, right? And then we can start looking for those longs. Okay, moving on to USD JPY, guys. The yen is still bearish, but also remember, let's keep in mind that the Bank of Japan can't step in at any time to save the yen, sort of. But it's not set in stone. But historically, they've done this, but it's not set in stone that they're gonna do it again. But as you know, the yen is fundamentally bullish. So I'm sorry, USD JPY is bullish, the yen is bearish, and all we're just looking for at the moment is buys. But I would just rather stay away from this market, because look at this, guys. We've had our move, right? We've had this impulse retracement. You can see we're just slowing down. So let's see what wants to happen, as the yen is also consolidating at the moment. So we just want to relax and be patient, right? I don't see anything clear for me in this market yet. When I see, I would let you know. Moving on, speaking of clearer markets, US 30. I mean, you can't do any wrong buying this. That's all you want to do. You want to buy this, and we have liquidity resting here, right? We have liquidity resting here. So I want a swipe of the low, and then perhaps maybe we even get how would I say, because if we look at our swing structure, right, on the daily, these are swing low, these are swing high. So I would like maybe deeper retracement. If we could get a retracement into, saying, taking this liquidity, or even this extreme liquidity, right? And that would just coincide with the 50% level, and then we could start looking for those longs from there. That would be nice to see, but it doesn't have to go there, guys. It doesn't have to drop that far. We could just from here just swipe this low, and then see that change of character and start pushing up from there. And even from here also, like, we have 1, 2, 3, 4. You can see people who trade trend lines, I'm sure they're in this already, because this is 1, this is 2, this is 3, this is the 4th touch of that trend line. So you could start looking at this and say, okay, perhaps now we have here as our area of demand, perhaps from this 3-monthly open, we start to push up from there. So it would be nice to see, because we've already seen a change of character, so we don't even have to retrace into this deeper level, right? We could just see this, and then from there we start to, get those new positions in. So let's keep an eye out for that, as we're looking for only buys on this pair. And for US oil, guys, oil, quite you can see, guys, here we have this body close, right? So we have here as a high, low, retracement, swing high, and this is our swing low, right? Yes, right here, right here. Now we retrace into that 50% level, and now we started to dump from there. So we decided to push down from there. Let's just see what wants to happen on this, as I'm still very much bearish on this. But I can also see, you can see the descending highs that we've left behind, so we can still see one more swipe of this highs, taking out this liquidity, because we left this liquidity, we left this high behind, we left this high behind. So we left a lot of descending highs behind, so we could come back, grab it, and then we start to push down from there. But for the moment, I'm still bearish on US oil until I see our swing high get taken out. So once we see that swing high get taken out, then we could start to look for some buys on this, right? And USD guys, as you can see, throughout we've been bearish, and now we are in a range. We're literally in a range on this. In a range, what have we always said, guys? You want to buy from the 0.25, you want to sell from the 0.75 level. So now we're at the 0.25 level. I'm more interested in buys on this, but also before you take any position on this, you want the dollar to align with your position. So if I see the dollar starts to change character and we start to push up, then I would be interested in looking for those longs here. We have our liquidity resting here, right? We also have here. So it's all about just being patient, wait for that liquidity grab, and then you wait for that change of character. The same thing we do every time. Okay, thank you for your time. I wish you a wonderful trading week, and I wish you a beautiful new year ahead. Stay dangerous.